Good morning and welcome to Unusual Activity, powered by Financial Juice with George Avedon and Milton Marmonides. Thank you for joining us this December 4th, 2014. As always, lots happening in the markets as we speak. ECB press conference with Mario Draghi. Various comments are impacting markets this morning, even just a little bit. But again, commentary is abound, and reactions are to follow. We have S&P futures are lower by 6.25 at 2066.50. We'll get into the technicals in a few minutes. We have oil this morning lower by 88 cents. Just ticked up a bit, down by 88 cents at $66.46 USD. Gold higher this morning by $1.90 at 12.1070 USD. We have the DXY, which we're watching very closely because, folks, remember the oil and gold are impacted by the because they're denominated in the U.S. dollar. Obviously, the strength in the U.S. dollar with respect to currency conversion. Certainly, the strength of the U.S. dollar does make an impact on commodity and energy prices. DXY currently at 88.504. Negative, down by 0.495. This is a indice that is compared to 10 other currencies. Also, so let's dive into this. A brief recap of yesterday's trading day. We had an overall positive tone in the SPX. We did have a relatively tight range of about 7 handles for most of the day, closed near the highs of the days. And folks, if you take a look at this this rally, ever since that October low, we had a really a V-shaped recovery from those October extended flash crash, as we're calling it, and it's really been a kind of a slow steps on the positive side. But again, very interesting here. We've been talking about are we getting a rounded top, but again, we'll dive into the technicals in a bit. S&P 500 were higher by 0.38% at 2074.33. The Dow Jones Industrials were higher by 0.18% at 17,912.62. Nasdaq was higher by 0.39% at 4,774.47. Certainly, this morning on the geopolitical macroeconomic is certainly oil prices continue to make an impact on OPEC commentary, on Russian commentary. We've heard several things out of Russia. We'll get into those in just a few minutes. Specifically, Putin. Certainly, the Russian-Ukrainian conflict. There was talk of new talks. There was continued fighting. Putin is becoming a little bit more, shall we say, bombastic with respect to rhetoric and his response to the West. So again, we see a little bit of a frustration coming out of Putin with respect to what's happening to the Russian economy, to the ruble. So certainly we have the ECB conference going on now. In addition to Draghi's commentary, the thought process is what's Germany's response to this? Remember, it's a different philosophical approach to economics. as we monitor Draghi's comments and read the commentary. So also looking at Germany's response. Remember, Germany's very much about fiscal responsibility, and it will be very interesting to hear what their responses to Draghi is. There were comments early this morning from yesterday from Putin with respect to the ruble and the downward trend. He's being rather he stepped up the rhetoric with respect to response, and again, very interesting. He mentioned amnesty for returning capital that's coming back into Russia from overseas, certainly, and mentioning that the declining value in the ruble against other currencies, mentioning perhaps that there's some speculative plays on that, and he's quote unquote not happy with it. So also from the Russian economic indication that may shrink to 0.8 in 2015, and so we're monitoring that as well. Any news coming out of Russia. So again, the oil certainly having an effect on the Russian economy. Out of China is set to be considering loosening restrictions on gold imports. Remember, India also came out with news with respect to imports a few days ago, so we'll see how that has what impact that has on the precious metal. Currently, gold is higher by $1.70 at $1,210.20 USD. So from ECB, some of the more highlighted commentary coming out. So leaves key interest rates unchanged. ECB sees 2014 GDP growth 0.8 versus 0.9 previously. Also, GDP growth for 2015 sees 1% versus 1.6%. So again, we've been discussing over the last several weeks with you folks specifically this notion of lower inflation expectations and this concern of deflation, which really hasn't entered the lexicon of the central bankers, but certainly we're absolutely certain that is on the minds of them. In the U.S., we had the initial jobless claims from November 29th at 297,000 versus 295,000 estimated. Prior revised from 313,000 to 314,000. Continuing claims, again, in the U.S. was 2.36 million versus 2.32 million estimated, so a bit higher on that as well. Prior revised from, actually no revision there, stayed at 2.32. So again, a bit higher on the initial jobless claims and a bit higher on the continuing claims. We did see a bit of a, if you're taking a look at the S&P futures, they were relatively flat this morning in anticipation of the news. We did see a tick down in not immediately after the initial jobless claims, but certainly after Draghi started to speak. We did see a real decent downturn in the S&P futures coming into this morning. So let's continue here. So again, we're anticipating also at 9:45 Bloomberg Consumer Comfort Index. 10:30 is the EIA natural gas report at 10:30. And of course, Fed balance and money supply at 4:30. Also, chain store sales today, and Baltic Dry Index falls by 5.6% to 1,019 points. It does tend to be a leading indicator with respect to activity. This is a very direct correlation to shipping raw materials. So again, a very interesting indicator to look at a daily basis and possibly where we go from here. So also at 8:30, Loretta Mester is speaking. Again, this is Fed Speak. We'd like to keep an eye on the Fed speakers just in case they mention anything with respect to monetary policy. Certainly, we've been hearing opinions on the quote-unquote considerable time and what that means, and frankly, if considerable time exists for a prolonged period of time, what impact does that have with respect to if you take that out of the statement, what impact does it have on the markets? And also Brainerd at 12:30 this afternoon. So again, we'll watch that. So let's run through the overnight markets quickly, and then we'll jump into the technicals. See what's on the mind of Milton this morning as we're approaching this market. In Asia, we were higher on the Nikkei at 0.94. Hang Seng higher by 1.72. And Shanghai higher by 4.31%. Very impressive in Asia there. FTSE lower by 0.34% currently. CAC compares lower by 0.84. DAX in Germany we have lower by 0.42%. IBEX lower by 1.40. Certainly quite a bit lower than we were this morning. So what we'd like to do is let's jump into the technicals. You have here on the ES, which is the futures, oil, VIX, and the gold. So Milt, let's jump into this a little bit. What's on your mind this morning? What are you seeing? Anything that talk to us a bit?
Well, first of all, Draghi's was a non-event, no bazooka. So market sold off, the euro popped. Everyone blames oil, everyone's blaming something, but in all reality, we all know what's going on here. It seems like it's a coordinated effort to sustain this market rally. If everything is so bad, why are markets at all-time highs? China's blowing up, going higher at 3, 4, 5% every day lately. It just seems a little odd. But, I'm just going to give you a quick rundown before the market opens. We got about 20 minutes, so I'm just going to quick couple-minute rundown on technical analysis. The ES, we're mentioning that really there is no resistance but the prior high, so currently the resistance levels are on that 2076. We have the ideal, intraday, ideal daily support around 2035 in these ES. Intraday supports are at that 2064, 2066 level, which they basically bounced right off of this morning. And watching that as a key level to break. If that level is broken, we could see that 2050 again, and keeping an eye on that level. Oil, we mentioned the resistance on the oil right now is at $68 mark. Hit it this morning. We posted that earlier in the rooms. Hit it this morning. We mentioned earlier as well that the support was 66 to 66.50. It traded to a low of 66.09 this morning. Bounced off of that and currently trading at 66.37. So we're keeping an eye on those two levels, 68 to the upside resistance, 66 to 66.50 on the downside support, and that is our current trading range. Regarding the VIX, it's the same story every day for the past couple of weeks. The range is 12 to 14. Trading inside that range for how long right now? It's really need to see an upside break for a market continuation, or not for a market to have that downside, give back of the previous run. So we're going to watch that levels, watch if that 1450 numbers are broken, keeping an eye on those and seeing if that is a continuation for the market to continue a sell side on the lows. We're watching those levels on the VIX, 12 to 14 in the range bound. Above that as a buy indicator around the 15 to 16 mark. Gold, real quick. We mentioned that for numerous times that 1200 in the past few weeks was the resistance level. It broke that 1200 number the other day, the beginning of the week. Now that number becomes support. watching that support level of 1200. If it could stabilize right here, we can see easily move up to that 1250 number. We're watching it. If it breaks that support of 1200 with volume, could retest that 1150 level. So right now on gold, 1200 is support. Key support on that is the 1200. We're watching to see how it trades around. If it could build a level, build a base here, and then continue its move either to the up or downside. But as long as it stays around this 1200 number, it's going to be building a base. We're watching it. We'll let you guys know if we see anything else. But as of now, that's the feel on gold. George?
Thank you very much, Milt. So that was your technical roundup, if you will, for both the ES, which is the S&P futures. The reason why we watch the ES is volume. It does give us an indication of volume follow through. Activity on that. So, and again, when you're looking at technicals, when you're looking at specifics on whether or not a move is there's some conviction in a particular move from a technical level, certainly volume is absolutely crucial. So that's why we watch the /ES or a E-mini S&P 500 futures. So again, S&P 500 futures this morning, we have our lower by 3.25, so a bit of a recovery here by about 3 points from that initial low this morning. Remember, so very important to note that this is pre-market, as all the traders are and investors are basically positioning themselves for the open. We'll see a little bit more pronounced activity both in the ES and specific stocks. So just keep in mind as we're going into the pre-market activity, what that means actually in translate that into actual trading and once the market opens. So a little bit of a difference there. Let's move on to where we are on commodities, energy, and raw materials. So let's turn back here just for a moment. Here we'll get that here. Okay. So in commodities, energy, and raw materials, certainly crude oil lower by 91 cents, currently at $66.47. Gasoline lower by 0.0158 at 1.7912. Heating oil lower by 0.0159 at 2.1174. Natural gas lower by 0.067 at 3.738. Natural gas has been very interesting here. We know that about a week and a half ago or so, we've had some comments that anticipating natural gas to be quite a bit higher. If we take a look at a chart, it's been coming down rather nicely recently. So we went from a high of in early November from about 4.549. We hit just about there on the 21st of November. And again, we hit that on the 26th of November at 4.539, and it's just been a precipitous decline outside of on the 1st of December, a slight positive day in December on natural gas, but it's been quite a bit of a downdraft in natural gas. Anecdotally, it's been, as we mentioned before, the Northeast in the U.S. tends to be a large consumer of heating oil and natural gas. Natural gas has weather has been rather quite a bit warmer than normal in the beginning of December. So again, that's something very interesting to at least keep in mind. Gives it a little bit of a color when you're watching these. On the precious metals, gold is lower by $1.90 this morning at 1206.30. So again, remember we broke through that 1200 as Milton mentioned. When you break through a resistance, technically, it becomes a support, and vice versa. If you break through a support, it becomes a resistance. Um, and really watching that on silver. We're higher by about 15 cents at $16.56 even. That's USD as well. Dollar denominated platinum higher by $9.80 at $1,237 even. Again, USD. Cocoa higher by $2 at $28.54. So you have that there. At the 9:30 hour, we'll have Yohei Elam from Forex Crunch discussing. We'll be asking him some questions and his thoughts on the ECB commentary and perhaps where we go from here. We had a really great conversation with him yesterday, and we'll dive into that. So on the Treasury side, the 10-year at 2.291, on the 30-year at 2.991, on the 30-year. Again, certainly a steeper yield curve, so there's a longer maturities. The one thing that we've been picking out is the belly of the curve, and the belly of the curve is the belly of the curve is the 2 and the 5 year, and that's been coming up a bit, and that's something that we'll monitor here. If we take a peek at where the U.S. Treasuries are with respect to the yield curve, we have the 2-year at 0.54. We have the 5-year at 1.6%. So again, it seems to be if you just look at just even compared to about a year ago or so, a bit different here, a bit different configuration. We had a year ago we had a 30-year at 3.9%. A year ago we had the 10-year at 2.84%. We had the 5-year at 1.44%, and the 2-year was at 0.29%. So again, we had a lift in the yield on the 2 and the 5-year, and a decrease in the yield in the 10 and the 30-year. So a little bit flatter curvature, if you will, in the belly of that curve. The 12-month really maintaining that 0.12 yield, and it's really that 2 and the 5-year, which is really anticipated since the ending of the QE3, and that's where we ending of the QE3, and remember the securities that they were purchasing was primarily the shorter term and the medium term securities, and that's where the 2 and the 5-year fit in rather nicely. And as they were placing that bid, when they were purchasing those securities, the Fed, it basically took out the duration risk. Duration risk corresponds to the fluctuation of bonds with respect to yield with respect to price movements. So taking that duration risk out of the equation, you really opened up the movement within the 2 and the 5 years. So that's, I think, very interesting on that. So again, we're monitoring that rather closely. We talked about the technicals, and so let's get into some of the specific stock news that are making the rounds this morning. And again, once the ECB conference ends, we'll have Yohei Elam join us this morning, and we'll have his thought process on what it all means from a macroeconomic perspective and impact on currencies. So this morning, the specific stocks: PSEC, Prospect Capital Corp, We had a COO purchase of 70,000. I'm sorry, 50,000 at $9.10. PSEC this morning. It is higher in pre-market at $9.17. Also, we had YY rumored to weigh online education site acquisition. And that's we're currently indicating this morning at $70.89. DAN, Dana Holding, nothing yet in pre-market, files automatic mixed security shelf. And mixed security shelf, folks, those of you who are inquiring about that, is a mix of various types of securities, whether they're equities, preferreds, or straight equities, preferreds, convertibles, fixed income. So that's and that it tends to be when you have a filing a secondary. Tends to be a dilutive effect or a negative effect for the stock price initially, as the companies wanting to borrow or wanting more funding for R&D and various other projects. So again, very interesting on that. Rio Tinto, RYRIO, Rio Tinto CEO says not looking at major acquisition, according to Reuters. So this morning we have Rio Tinto at $46.51. We did have a early morning low at $46.13. And so we'll see how that translates into the trading day, and that's about 5 minutes away, the opening bell. So we'll see how that corresponds there. MARK sells 4.4 million shares for holder. We don't have anything yet in pre-market. That's Remark Media. We don't have anything in pre-market indication yet. So again, we'll see how that corresponds into the trading day. Just a few minutes away. So LPG sells 33.8 million shares to shareholders. LPG, Dorian LPG, not indicating anything yet. So we'll see how that again tends to be syndicates tend to be a dilutive effect for the actual security. Just wanted to put that it's something that's making rounds according to the New York Times. Proposed UK tax hike would hit tech companies. So again, we'll see how that translates into specific securities. AHP, Ashford Hospitality, files $300 million mixed security shelf. Again, mixed security shelf, a mix of various securities for the secondary. And AHP currently, we don't have anything yet in pre-market. Again, we're just a few minutes away from the open. In DGLY and Taser, we'll put both of them there. Taser, so DGLY and Taser going to very interesting plays with all these protests and government officials talking of cop cameras. So again, we know that the situation in Ferguson. We know yesterday there was also a grand jury did not indict the officer in New York City. Some talk of protests and so forth. So again, discussion of we know that President Obama mentioned that there was a bill trying to be passed with respect to allowing money for cities and government entities to put cop cameras, quote unquote. So again, DGLY this morning at $18.59. TASR Taser International we have this morning at $23.59 currently. So we'll see how those stock trade once the market opens. Also, we have We have Plug Power. Plug Power this morning at $3.92, a high of $4.08. Had an interesting fuel cell contract announced this morning as well. A good one to keep an eye on. So again, we had a little bit of a volume rush right at around 8 o'clock this morning. Came up to $4.08, and so slightly lower than that by about 16 cents at $3.92 this morning. Continuing here, CYTX. CYTX, people on blogs and chats talking about this name due to possible new Japan law. Satori Pharmaceutical. We don't have anything yet in pre-market, but again, we'll keep an eye on that. It's making the rounds in blogs and chat rooms. We try to pick up on that type of information. Should it make an impact on the security? KR Kroger, currently at $60.50, as high as $62 this morning. Sees fiscal year 2014 earnings per share at $3.32 to $3.36 versus the $3.29 estimated. Also, we have CLX, automatic debt security shelf offering at let's see. So we are currently at $99.54, at $99.91. So we do have the market open, folks. So let's continue what we're seeing on the syndicate level. And as we hear news and see news coming through, we'll comment on them. We currently have WMS. 10 million share secondary priced at $21.25. Currently, stock is at $22.18 as we're getting into the open here. EBC, we sold 2.1 million shares of common stock at currently $29.82. That's Agree Realty. So again, we'll see quite a bit of a decrease from yesterday's close, which was just below $31. So again, these syndicates do tend to be dilutive versus accretive. Excuse me. LXRX, we selling 4.7 million shares for holders. Currently getting indication of 97 cents this morning. This is Lexicon Pharmaceuticals. So see where that takes us this morning. SUPN files to sell 112.8 million security shelf. Currently at $9.41 this morning. So again, files to sell $112 million mixed security shelf and 12.8 million share for holders. So we'll see where that takes us there. Let's get into some of the top insider purchases that are making the rounds this morning. HCOM, Hawaiian Telecom at $26.11. We have a 10% owner purchasing 56,000 shares at $26.07. We'll show you the chart as we're going through this, folks. Okay. So you see here, HCOM on the top. We'll go switch off here. American Asset Trust, we're waiting for that. Currently at $39.38. So 10% owner purchases 5,000 shares at $39.12. So again, we'll see if we can get a little bit of a carryover from yesterday's late day volume. DO, Diamond Offshore Drilling, Lowe's Corp 10% owner purchases 410,000 shares at $29.43. We see the volume spike in late morning yesterday. and that's at so we're currently at $31.38. ARI, Apollo Commercial Real Estate Finance. We have director purchasing 17,500 shares at $16.70, and that's exactly where the stock is now. In very early trading. VRX, Valiant Pharmaceutical, we have director purchasing 1,500 shares at $145.73. That's pretty close to where we are this morning. And a quick check on the futures this morning. We have a negative 2.75 at 2069.50. Perhaps we'll track the ES on the bottom and see where we go from there. We did have a little bit of a volume, clearly a volume pop on the open. Excuse me, folks. So we certainly still have Draghi speaking. So a couple of things coming out of Draghi. Draghi says may end up buying way less than the $40 billion in euros of asset-backed securities. So again, we'll keep an eye on that as more news is coming out. So, okay. Few more insider purchases here. SPB, Spectrum Brands Holdings, Harbinger Group, let's see, 10% owner purchasing 93,000 shares at $91.72 in SPB. Currently at $92.29. We did have a late day spike up in volume as for that particular in that particular security, currently at $92.29. MATR, Matterside Corp, director purchasing 10% owner purchasing 37,000 shares at $5.99. Currently, stock is indicating at $6.12. Again, not much going on in the security as of now. Also, OHAI, OHA Investment Corp. We have a director purchasing 13,000 shares at $6.15. We did have some late day volume bursts yesterday, clearly. Not a huge amount of volume, but again, some bursts there. And currently stock is at $6.04. So we'll see if we can get a carry through on that. SFXE Entertainment Incorporated. Currently stock is trading at $4.67, higher by about 4.5%. Let's see, Silverman, CEO and chairman of the board, 10% owner, purchasing 1.3 million shares at $4.21. So that's a rather impressive purchase there. So again, SFXC Entertainment currently up about 4.5% in early trading. A few things that we're getting through this morning. So again, we're monitoring Draghi. So we'll see where we are. So we'll get Yohei's sentiment on this and feeling on this. Yohei?
Hi there. Can you hear me?
How are you?
I'm doing great.
Good.
It's quite exciting, this press conference. Yeah.
Yeah, no, perfect. So welcome back. Thanks for joining us again. Tell us your initial thoughts of the conference. What's your feeling on that? Higher level, if you will.
Yeah, we have Eurodollar one leg up. It went from the lows that it reached earlier above the 123.60 level, which was the previous double bottom, but still below the next resistance line of 124. We had sort of two phases in this press conference. The first one was that we didn't have imminent QE. that's not what I thought we would get.
Mm-hmm. So your thoughts? So you think that he would have commented on QE a little bit more, prolific, a little bit more prolifically. Excuse me. Wow. You thought he was going to be a little bit more straightforward with the QE.
Yeah, and it was more of a wait and see mode. It was clear to see that there was more German opposition than I earlier thought, contrary to the previous meeting, where he reasserted his leadership. This time he was, I think, a bit pushed back. So there's wait and see on the recent fall in oil prices, on previous measures, on the TLTRO that we're getting next week. So this basically sent the euro dollar higher. But then we saw a bit of a pushback because there were many questions from reporters about QE, and he said they discussed it seriously. And most importantly, he said there's no need for unanimity. So he doesn't need the German consent for moving on with QE, and that's where we saw euro dollar slide back down. So that's where we are. I think we got our drama.
Yeah, no. Do you think that this is a little bit of a political speak on the part of Draghi with respect to Germany? I know, we spoke about it yesterday, but the reality is the German, culturally and economic perspective is quite a bit different than the rest of Western Europe. They're more, certainly fiscally responsible. Or at least they preach fiscal responsibility. Do you think we get a little bit more wrangling here out of Germany?
I think Germany got sort of a pause for now. They got their share, but eventually, we saw the downgrades in forecasts by the ECB. They're basically saying that it will be in 2016 only 1.3%. That's more than a bit below 2%, and that's quite far in the future. So eventually, like I did a few times, they'll have to fulfill their mandate. Especially the last point at the end, he was asked if QE would be legal or illegal, if it would be challenged, and his last word was that not pursuing the ECB mandate would be illegal. So I think eventually we got a pause, but eventually with deteriorating inflation and determined Draghi, we will get QE quite early in 2015.
Okay, so your feeling is, and I know you mentioned this, early is not early. That was kind of an interesting choice of words, but your feeling is that we may get QE in early 2015.
Yeah. So I think it'll happen sooner than later. That means in the January 22nd meeting. But if not, the next one is in early March, and then we'll have updated forecasts. And of course, there's an argument if oil is a mini stimulus, which I think it is for the United States.
Yes.
Or does it become embedded, as Draghi said, or have secondary effects for the wider inflation picture? And well, the basic difference is that the United States is growing and has a relatively low unemployment rate, and Europe is on the verge of recession and with a high unemployment rate. So, I think there is a clear picture.
Yeah, no, it's and I know you being in Spain, I know you're seeing this firsthand. So if we do go forward with QE, what are some of the trade scenarios that you're thinking of? Let's do a little scenario planning, if you will. Let's say we have QE, we have asset-based securities, we have the covered bonds. I mean, did he mention covered bonds this morning?
Yeah, I briefly mentioned, and he had this half joke about we're considering everything except gold. Sort of a wink towards the Swiss referendum.
Yes.
So everything is on the table, but clearly the universe of the ABS or covered bonds is limited. Of course, it might expand in the future if the ECB begins buying more and more, so we'll have this market expanding as a result of ECB action. But if you want quick action, you have to tap the biggest market, and that's sovereign bonds. So.
Right. Now, if I'm, and correct me if I'm wrong, covered bonds, they go up to 5 years, correct?
Yeah, I think so.
Okay. So one of the things that we've been picking out over the last few days is, we've noticed that in the U.S. specifically, the 2 and the 5 year have come up in yield uh, versus a year ago, and certainly after the QE has ended. Um, this notion of taking out the duration risk out of these bonds. I mean, I'm anticipating the same thing coming through to, on the European side. How do you structure a trade around that? How do you go towards the longer end of the curve? I mean, on the bonds, and also how do you structure, um, what's the next trade? What do you think?
It's hard for me to say. It's easier for me to talk about euro dollar, which I see
Please.
eventually going down. But regarding bonds, I think eventually, if the ECB indeed they launches full-blown QE, all boats will rise, and
Yeah.
it will be the twos, the fives, the tens, and the 30s. We might see Greece maybe auctioning 30-year bonds or things that were
Yeah.
seemed crazy a few years ago.
Yeah.
So I think that, and also I think it will have some kind of a positive effect on European stocks. Of
Hmm.
course, the more successful ones, more successful companies will do better in the stock market than
Yeah.
the others. But eventually, I think it will also trigger some growth and also have this rotation effect, as it's sometimes called in the United States, of the ECB buys sovereign bonds in Europe. This crowds out some money and pushes it into stocks. So
Right.
I think also European bonds also have positive prospects.
Right, absolutely. I mean, if there's a bid in fixed income, clearly, you can have, obviously, inverse relation to, lower yield, and if folks are chasing yield, uh, then perhaps they go into, the better quality equities, and as you mentioned, that rotation, comes into the stock market. I think that's very poignant. If we do get, as you say, if we do get QE early in 2015, I know we talked about the euro yesterday, the 1.2000. How low can we go if QE enters the lexicon?
I don't know what will be the final point. I think it can bottom out somewhere in the second half
Yeah,
of 2015. My guess, and it's a guess, would be somewhere between 110 and 115. I don't think we'll reach parity.
yeah.
The levels I see below 120 are the 2010 low of 118.75, the launch number of 117 back in 1999 has a symbolic impact, I think, as well, and
Yes.
the round number, of course, of 115.
Okay. So 115, possibly to 114. So question for you. I mean, are you? So we have, potential euro coming in with a QE. Are you, slightly, keeping the conversation slightly on the global level?
Mhm.
Clearly, our thought process is that central bankers will continue to not just have their, the hand on, the finger on the pulse, but the trigger on the QE button, meaning if they foresee some kind of weakness, our thought process is just not going to stop.
Yeah, well, even in the United States, where you have some nice growth and growth in jobs, and the Fed has ended QE.
Yeah.
If we just look at just one step beyond the headlines, it doesn't squeeze its balance sheet. It's reinvesting the proceeds
Yeah.
from maturing bonds. So it still maintains a big balance sheet. The first
Yes.
step in the Bank of England is to raise rates when time comes and only afterwards squeeze the balance sheet. The ECB is looking at various ways to expand its balance sheet, so is the BOJ, which is extremely active. The Swiss National Bank, its way of maintaining the peg is expanding its balance sheet. So,
Yeah.
yeah, we're going to have a few more good years of increased central bank activity.
So maybe the whole hum rally, you know, will continue in this manner, perhaps. I mean, it's been a little. I know a lot of traders are saying that it's been a, I don't want to say boring market, but certainly that notion of you know, volatility. Everyone's looking for volatility. Perhaps this will continue into 2015. You know, it's very interesting.
Yeah, well,
Yeah.
I think that. Yeah, sorry.
Please go ahead, please.
No, just say that we have seen a positive change in volatility in September. I hope it continues, but yeah, we have still too much liquidity, and it's kind of an enemy of volatility. So
Yeah, no doubt, no doubt.
yeah.
Is there anything else that you think is pertinent to pick out of you know, Draghi's tone? Do you anything else that comes into mind? And my other question would be about your view on Russia. I know there's first, you know, let's finish off on Draghi, and then we'll go into Russia just for a few minutes, if you don't mind.
Sure. No, about Draghi, basic points are we need to reassess the recent fall, the recent sharp fall in the price of oil. The ECB staff is working hard preparing a QE program, but nothing has been decided, not yet, and the vice president repeated that. Inflation forecasts have been revised significantly, so I believe eventually. Oh, an important point here. The inflation forecast was revised to the downside, and it did not include the recent fall in oil prices. So we're expecting. I mean, what we can learn from that is that these forecasts are already too optimistic, and they're not even that fresh anymore. But the ECB needs a bit more time. I see it more due to German opposition. Maybe the Germans would need to see more depressing numbers on inflation and perhaps on growth, not only forecasts but also real data, in order and to prepare the public. Perhaps it's very political, of course, for QE. So that's my take. A small pause.
It seems like Germany wants to see a little more blood on the streets before anything else happens. Which, you know, look, I mean, one can agree to that. You know, in philosophy, you know, they certainly have a very different economic philosophy. I think someone coined it as liberalism, where, you know, it's a conjunction of unions and you know, good monetary policy and fiscal responsibility, and having everyone on board versus the Keynesian method of, you know, full employment and you know, central bank involvement. So I think there's a you know, a philosophical difference there. But again, very interesting to see how that pans out. And I think you mentioned a really great point. If they're not even including oil in that inflation reading, I'd love to, you know, I can't wait to see the next inflation reading, where, you know, it actually includes oil. And as you said, I think the anticipation is quite a bit lower, perhaps.
Yeah, we're currently at bottom low level, 0.3 on CPI and 0.7 at core CPI. These are levels that were seen earlier in 2014, but they're the lowest CPI since 2009 and core CPI for a very long time. Yeah, Germans have more of a savings mentality and more responsible mentality. It wasn't always that true. 10 years ago, they were the sick men of Europe, and their debt to GDP ratio is not shiny. But it's more that I think they have a savings mentality and a huge fear of inflation. So they would rather have depressed growth and deflation than just a small chance of
Yeah.
inflation.
Yeah, no, absolutely. I mean, I think again, I think that political wrangling within the EU, I think, will continue. Again, I think you bring up some really great points with respect to how they act, and is there German opposition for that. A quick note on Russia. I know we try to bring up Russia because they're big oil players, right? And the fact that they have military maneuvers, and Russians being Russians, Putin being Putin, he's former KGB, former Soviet Union position. So again, we have to really keep that in mind. What's your thought on that? I mean, outside of really doing anything dumb uh, on the part of Putin, is there any concern in FX with respect to the ruble? I mean, what's your thought on that?
Yeah, Russia, Putin especially being the person he is, and Russians in general, with all the cold weather over there and all the history of suffering, I think they're relatively tough. There is room for more suffering in the Russian economy. It can also be an opportunity for them with high import prices and sanctions to do some internal reforms to improve their to diversify away from oil. The fall in the value of the ruble has been bigger than the fall in oil prices.
Right.
So the damage is not that big from there. But yeah, they don't want a recession that would be too hard. I think the West quietly said goodbye to Crimea, but would not allow for another, or would ramp up rhetoric if things escalate and things can blow up in any moment. Well, fighting is still going on there.
Right.
I think both Germany and Russia will try to slowly de-escalate, or at least not re-escalate the situation. So, the ruble could still continue falling. I heard something interesting, an anecdote. Putin is 63 years old,
Yes.
and dollar ruble could reach 63.
Yes.
And so maybe that's the next target.
And the third one, the third leg of that is oil could reach 63.
Oh, right, yeah.
Yes.
Triplet.
Yes.
Yeah.
And that was a good article. That was very good. Yeah, no, look, we always point to the fact that headlines are headlines. You have to look at the internals of what's really happening in economies, in FX and bonds and yields and stocks, and headlines are important, but it's really the correlation to what happens in the marketplace based on those headlines. So I think that's I think you bring up good points. And again, we'll see what happens in Russia. Yohei, thank you so much for joining us as we're coming up to the 10 o'clock hour. Just a quick check on the futures in the U.S. We're lower by 3.25 at 2069.25. The DXY, the dollar index, is at 88.559, lower by 3.387. Crude oil is lower by 60 cents at $66.78 USD. So again, keeping in mind oil and gold are dollar denominated, so fluctuations in the dollar can have an effect on that. Once again, Yohei, thank you so much for joining us, and thank you for the insight on the ECB meeting and Draghi. We hope to have you on again. You certainly provide a great color and great insight into what's happening globally and macroeconomically. Thank you for joining us.
Okay, thank you.
Thank you. And folks, thank you for listening to Unusual Activity. powered by Financial Juice with George Avida and Milton Marmonides. Special guest Yohei Elam from Forex Crunch. Thanks, folks, for listening. Have a great day and good hunting.